Ever wondered how to invest in mortgage-backed securities? Well, you're not alone. The world of investing can seem like a labyrinth, especially when it comes to complex financial instruments like these. So let's break it down, starting with what mortgage-backed securities are. Imagine a bank that has issued a lot of mortgages. Each of these mortgages is a promise from a homeowner to make regular payments over a long period of time. Now, instead of waiting for all these payments to trickle in, the bank decides to sell the rights to these future payments. They bundle up a bunch of these mortgages and sell them off as a package. This package is what we call a mortgage-backed security. The buyer or investor of this package now has the rights to the future payments of these mortgages. They've essentially bought a piece of the bank's mortgage business. As homeowners pay their mortgages every month, the investor receives a share of those payments. This includes both the principal, the original loan amount, and the interest that the homeowner is paying on top of that. So, in a nutshell, mortgage-backed securities are a type of asset-backed security that is secured by a mortgage or collection of mortgages. They work almost like a bond, offering investors regular income payments over time, but with the added security of being backed by real, tangible assets, the homes that are mortgaged. The beauty of mortgage-backed securities is that they allow banks to free up their capital and lend more, while providing investors with a steady stream of income. This makes them a key instrument in the financial ecosystem, playing a vital role in keeping the wheels of housing finance turning. So now that you have a basic understanding of what mortgage-backed securities are, you might be wondering, how do I invest in them? Well, stay tuned, because we'll be delving into that topic in the next scene. Investing in mortgage-backed securities is more straightforward than you might think. Let's start with the basics. A mortgage-backed security, or MBS, is a financial product backed by a mortgage loan. When you invest in an MBS, you're essentially buying a piece of these loans. Now, how do you go about investing in mortgage-backed securities? The process typically starts with a broker or financial advisor. These professionals have the knowledge and expertise to navigate the financial markets and can help you select the right MBS for your investment portfolio. Alternatively, you can also purchase mortgage-backed securities directly from the issuer, like a bank or a government agency. This route may provide more control over your investment, but it also requires a deeper understanding of the financial market and the specific MBS you're interested in. Regardless of the path you choose, due diligence is key. Before investing in any MBS, it's important to thoroughly research the security. This includes understanding the underlying mortgage loans, the creditworthiness of the borrowers, and the potential risks associated with the investment. Remember, investing in an MBS means you're investing in the ability of the borrowers to repay their loans. So, what are some of the risks? Well, one of the biggest risks is prepayment risk. This occurs when borrowers repay their loans early, which can reduce the interest income for the investor. Another risk is interest rate risk, where changes in interest rates can affect the value of the MBS. In addition, it's also crucial to understand the structure of the MBS. Some mortgage-backed securities are simple pass-through securities, where you receive a proportionate share of all principal and interest payments. Others are more complex, with different tranches that receive payments in a specific order. There you have it. You now know the process of investing in mortgage-backed securities. Remember, knowledge is power, especially when it comes to investing. So, take your time, do your research, and make informed decisions. But why should you consider investing in mortgage-backed securities? Let's dive into this intriguing world and uncover the first two benefits. The first benefit we'll discuss is the potential for attractive returns. Mortgage-backed securities, or MBS, have a history of offering investors competitive returns compared to other fixed income investments. For instance, compared to treasury bonds, MBS can often offer higher yields. This is primarily due to the risk premium associated with the chance of prepayment, that is, the borrower paying off their mortgage before the maturity date. Now you might be thinking, risk? That sounds scary. But remember, with greater risk often comes greater reward. And with the right research and understanding, you can navigate these waters to your advantage. Moreover, these attractive returns are, more often than not, consistent. This is because mortgages are typically long-term arrangements stretching over 15 to 30 years. So, when you invest in an MBS, you're essentially securing a stream of cash flows for a considerable period. This can be a fantastic addition to your investment portfolio, especially if you're looking for a steady income. Speaking of portfolios, this brings us to the second benefit: diversification. Diversification is a key strategy in investment, helping to spread risk and potentially enhance returns. By including MBS in your portfolio, you're adding another layer of diversification. You see, MBS are backed by residential or commercial real estate mortgages. Unlike stocks and bonds, which are tied to the performance of a company, the return of MBS is linked to the borrower's mortgage payments. This difference in underlying assets can help smooth out the bumps in your investment journey, providing a cushion against market volatility. And remember, diversification doesn't just mean spreading your investments across different asset classes, but also within asset classes. So, adding MBS to your portfolio can provide that extra layer of safety by spreading your risk across numerous mortgages instead of just one. Impressed yet? Hold on, there's more. The advantages of mortgage-backed securities don't just stop there. Let's dive deeper into the well of benefits that these unique investment vehicles offer. The next perk on our list is the regular income stream. Mortgage-backed securities, or MBS for short, provide a consistent income stream to investors. How? Well, these securities are backed by the monthly mortgage payments of thousands, sometimes millions of homeowners. As these homeowners make their payments, you, as an investor, receive a portion of that income. Imagine the steady rhythm of cash flowing into your bank account, month after month. It's like having a dependable, hardworking employee who never takes a day off. Now let's talk about liquidity. In the world of investments, liquidity refers to how easily an asset can be bought or sold without affecting its price. High liquidity means you can quickly convert your investment into cash, and mortgage-backed securities certainly fit the bill. The market for mortgage-backed securities is one of the most liquid in the world. This is due in large part to the involvement of government-sponsored entities like Fannie Mae and Freddie Mac. These institutions buy up huge amounts of mortgages, bundle them into securities, and then sell them to investors. This creates a robust and active marketplace where buying and selling can happen swiftly and smoothly. This high level of liquidity offers two main advantages. First, it provides you with the flexibility to adjust your investment strategy as market conditions change. And second, it means you can quickly access your money if you ever need it in a pinch. So, there you have it. Mortgage-backed securities offer a regular income stream and high liquidity. Two benefits that can make them an attractive addition to your investment portfolio. Still not convinced? Let's discuss one final benefit. Last but definitely not least, the fifth benefit of investing in mortgage-backed securities is the potential for capital gains due to changes in interest rates. This may sound a bit complicated, but let me break it down for you. As we know, interest rates and bond prices have an inverse relationship, meaning when one goes up, the other goes down. So imagine a scenario where you've invested in mortgage-backed securities and the interest rates decrease. What happens then? The value of your mortgage-backed securities rises. Why? Because the fixed income payments of your securities become more attractive compared to the newly issued bonds and other similar investments. This gives you the opportunity to sell your securities at a higher price than you initially paid, leading to capital gains. And that's just the tip of the iceberg. Mortgage-backed securities offer a host of benefits including diversification, regular income, and a level of protection against default, which we've explored in the earlier parts of this video. But as with any investment, it's important to remember that there's no such thing as a free lunch. While mortgage-backed securities can offer attractive returns, they're not without risks. Changes in interest rates, prepayment risks, and market volatility are just a few of the factors that might affect your returns. So what's the takeaway from all of this? Investing in mortgage-backed securities can be a smart move for those looking to diversify their portfolio and potentially earn regular income and capital gains. But, as always, it's crucial to do your homework and understand the ins and outs of these securities before jumping in. In this video, We've gone over the basics of mortgage-backed securities, how to invest in them, and their benefits. It's a lot to take in, but don't worry. You can always revisit the video if you need a refresher. So there you have it. You're now ready to take the leap and invest in mortgage-backed securities. Always remember to do your own research, and happy investing.